everybody. Happy New Year and welcome back. I'm Joe Gallimore, Director of Investment Management with Argent Bridge Advisors, here today to bring you the very first Cup of Joe of 2023. So today we're going to recap the investing landscape from last year and look ahead into the new year with some reasons for hope and some reasons we should have some moderated expectations going forward. So to recap 2022, well, it's no secret there was no shelter from the storm. Both stocks and bonds experienced a very tough year. The S&P 500 ended the year at minus 18%. U.S. mid-cap and small-cap, international and emerging market stocks were all down somewhere between minus 14 and minus 20%. And the U.S. aggregate bond index had its worst calendar year ever. And I'm just going to leave that one right there. So the bottom line is that everything outside of commodities and energy stocks experienced significant repricing, and we've discussed at length many of the reasons why. Even cash last year didn't really do you any good. It guarded against the downside, but after 7 to 8% inflation, your dollar today only buys about 92% of what it did a year ago. So before we move on to the outlook for 2023, I want to spend a moment talking about a cautionary tale in investing and chasing performance that we can learn from 2022. So at the start of last year, I think 8 or 9 of the top 10 stocks in the S&P 500 were tech stocks. And the weight of that whole sector in the index was over 30%, which is huge. So the tech sector last year was down minus 28.2%. Let's look at some of the tech darlings. Apple, Amazon, Facebook, which is now Meta, Google, Microsoft, NVIDIA, and Netflix. The average performance of these stocks in 2022 was minus 43.4%, and that was the average. The best performer of this bunch was Apple with a minus 26.3% return. And neither of these stock stats include Tesla, which we've all heard tons about and clocked in with a whopping minus 65% return for last year. So there are 2 lessons to be learned here from the run-up in tech and the year it just had. The first is don't become overconfident. Tech enjoyed a wonderful 5 years and enjoyed a spectacular 2021. But don't become overconfident in what you own, because then it turns around and has years like last year. Second is diversify. The weight of this sector in the S&P 500 made the S&P 500 an excellent investment in the years prior, but became a double-edged sword with by dragging down performance in 2022. So it's always important to stay diversified. So now, looking forward into 2023, we expect this year to be a year of change. A year of change in inflation, in Fed policy, the global economy turning over, and very hopefully a change in the situation in Ukraine. So what to do? First, stick to your investment plan. You need a reminder of what that is, please ask your advisor, but stay the course and do not capitulate. We've reminded everyone many times that the stock market is not the economy and the economy is not the stock market. But often differentiating those two with everything you hear on the news can be very difficult. And historically, the stock market has started its long-term recovery weeks, if not months, before the economy actually hits a bottom. Now, this current market wants very much to recover, but before it starts to do that, it just needs to believe that sufficient uncertainty, both economically and structurally, has subsided. Now, reasons for hope. There are several reasons for hope that 2023 can be a year of change to the positive. First is that the Fed has already pulled it out of 5th gear when it comes to its rate hiking policy, and it intends to keep moderating its pace as long as inflation data cooperates. Second is that employment is still very low. Third, we've been hearing some rumblings lately that consumer behavior also has the potential to pull down inflation faster, and faster declining inflation would likely imply shifts in policy and market sentiment. Also, regarding the global economy, China has reversed its zero COVID policy with intentions of reigniting its own economy. And this would be a huge plus for the global economy at large. And also this final one, which might seem a little counterintuitive, the simple fact that things feel so bad may not actually be the worst thing historically. In 2022, the S&P 500 has its 7th worst calendar year ever. Home prices and home purchases are now way down. And inflation has been extremely elevated, the highest it's been in, I think, 40 years. It's been that elevated for a whole year now. And this is just to name a few things. Now, all these things together bring to mind the old adage that it's always darkest before the dawn. And if you have any faith in the experience and wisdom of Warren Buffett, he reminds us to be greedy when others are fearful and be fearful when others are greedy. So now I want to mention some reasons of why we should be a little conservative with our expectations going into the new year. The first is that we are playing with external factors. Inflation can be somewhat of a wild animal that can surprise us out of the blue. And global headlines always have the potential to stunt a recovery. Now, if you're trying to play this bear market and recession by the numbers, I want to offer you this. Since World War II, the average recessionary bear market has lasted about 15 months. Now, the dot-com bear market back in the early 2000s, that lasted a little over 2 years. The great financial crisis of 2008 lasted about 17 months. And then the COVID crash of 2020 lasted almost exactly 5 short weeks. In our current edition, that 15-month average would land us right at March 31st of this year. But as you can see, these bear markets vary greatly in duration, and all of those have actually gone lower than where we currently are. So we believe that the prudent thing to do in 2023 is to expect continued market volatility for at least the very first half of the year. The longer it goes, the greater the odds get that the worst is behind us. But keep your expectations moderated. So remember, stick to your plan, control what you can control, tune out the noise, and have faith in perseverance. So we at Argent Bridge are here to support you in creating success in 2023, and we're happy to answer any questions you have along the way. Thank you all very much.